Are you also confused about which plan you should buy? A term insurance plan, a ULIP plan, or an endowment policy? And if your answer is yes, then trust me, you are not only the one. These three plans are often compared with each other. But truth is that they are designed for very different financial needs. Because one plan focuses mainly on protection, another combines insurance with market linked investment, while the third plan offers insurance along with long term savings. To understand these plans more clearly, imagine you walked into a mobile store to buy a new phone. One phone has the best camera, and another offers the best battery life, and the third comes with higher performance and advanced features. So, can you really say that one phone is better than the others? And not really, na? Because it completely depends on what you need. So, if photography is your priority, you will probably choose the phone with the best camera. And if you are always traveling and need your phone to last all day, the bigger battery would make more sense. And if you need speed and performance, you might choose the phone with more advanced features. So the point is that none of these phones is wrong. They are simply designed for different peoples. And the same term insurance, ULIPs and endowment policy work in a similar way. So who is actually right? So before we start, hi, I am Mariam and you are watching PolicyHub. And in this video, we are going to understand what each of these plans is actually designed for, who should consider buying them, and how you can choose the one that genuinely fits your financial goal. So let's start with term insurance. So simply, term insurance is pure financial protection. That's it. And there's no investment, no savings, and usually no maturity benefit. Its only purpose is to make sure that if something unfortunate happens to you during the policy term, your family receives financial support. Since the insurance company is not promising any return at the end of the policy, the premium is generally much lower. And because of this, you can usually get a much higher life cover within the same budget. And that is why you will often hear people call term insurance the purest form of life insurance. But what happens if you survive the policy term? Will you get anything back? So the answer is very simple, and which is no. Because the moment people hear this, they often feel as though they are losing money. And it's natural because we are human. And we all like the idea of receiving something in return for what we pay. But think about this. If you have been paying for health insurance for years and thankfully never had to make a claim, would you say that your money was wasted? And probably not. That is because the purpose of health insurance was never to make you money. Purpose was to protect you during a medical emergency. And term insurance works in exactly the same way. Its value is not in what comes back to you. Its value lies in the financial security it provides to your family when they need it the most. And let's talk about the ULIPs. So ULIP stands for Unit Linked Insurance Plan. Unlike a pure term insurance plan, ULIP combines life insurance with market linked investment. And a part of your premium is used to provide life insurance coverage, while the remaining amount is invested in different market linked funds. And depending on the option available under the policy, your money may be invested in equity funds, debt funds, or combination of both. So this is what makes ULIP attractive to many people. And you receive life insurance protection while also getting an opportunity to build wealth over the long term. And there is one important thing you need to understand: the returns from a ULIP are not guaranteed. Since a portion of your money is invested in market linked funds, the value of your investment can increases or decreases depending on the market performance. So if the market performs well, your investment may grow, but if the market performs poorly, your returns may be lower than expected. And this is why a ULIP should not be selected only because someone promises you high return. That's why before buying ULIP plan, you must understand the fund option, charges, risk level, policy condition, and your own investment horizon before making a decision. Because ULIPs may be considered by someone who wants life insurance and market linked investment within the same product, understand investment risk, and is comfortable staying invested for the long term. And let's talk about endowment policies. So unlike a term insurance plan, endowment policy combines insurance with savings. So part of your premium goes toward providing life cover, while the remaining amount is used to build a maturity benefit that you receive if you complete the policy term. And that is exactly why many people find endowment plans attractive. The thought of receiving a lump sum amount in the future feels reassuring, and it almost feels like your money has been working for you while also providing insurance coverage. Unlike ULIPs, where returns are linked to market performance, traditional endowment policy generally focuses on more predictable savings. So, depending on the policy, the maturity amount may include guaranteed benefits along with bonuses if applicable. And it is important to carefully check which benefits are guaranteed and which benefits depend on bonuses or the insurer's performance. And then there is another important point to understand. Since your premium is doing two different jobs, providing insurance and creating savings, the amount available for life cover is generally much lower compared to a term insurance plan with the same premium. And this is where many people unknowingly make the wrong comparison because they look only at the maturity amount and completely overlook how much financial protection their family is actually receiving. So, does that mean one plan is good and the others are bad? Not at all. That is actually the wrong question to ask. The better question is, what do you expect your insurance policy to do? If your biggest priority is making sure your family remains financially secure in your absence, then a term insurance plan usually makes more sense because it focuses mainly on providing a higher life cover at a comparatively affordable premium. And if you want insurance along with market linked investment, understand the risk involved, and are comfortable remaining investment for the long term, then a ULIP may be worth considering. On the other hand, if your priority is disciplined saving along with insurance, you prefer more predictable benefits, and you are comfortable with comparatively lower life cover, then an endowment policy could be a suitable option. So, before buying any policy, you should also ask yourself whether you want only financial protection, market linked growth, or disciplined long term savings. Because at the end of the day, life insurance is not only about recovering your premiums or earning returns. So its first purpose is to protect the people who depends on you. So once you understand the difference between protection, investment and savings, choosing between a term insurance, ULIP and endowment policy becomes much simpler. And I hope this video helped clear your confusion, and if it did, let me know in the comments which type of policy you were considering before watching this video. And thanks for watching. I'll see you in the next video. Till then, bye.